In this video, we will discuss the United States federal progressive income tax system. Under a progressive income tax system, the more you make, the higher your tax rates are. For example, in the United States, for 2021, your first $12,550, if you're single, is not subject to any federal income tax, a rate of 0. But if you make over $12,551, the dollars over that, up to another $9,950, are subject to a 10% tax. Then between $9,950 and $40,525, they're taxed at 12%. The next income up to $86,375 is taxed at 22%, and then up to $164,925 at 24%. Up to a little over 200,000, 32, up to a little over $500,000, 35, and currently above that, 37. The Biden administration is currently proposing creating again a 39.6% tax bracket above this. These brackets have varied drastically throughout history. The first federal income tax in the United States was created by the Lincoln administration during the Civil War, but that income tax was declared unconstitutional after the war was over, and the U.S. did not have a federal income tax then again until the Woodrow Wilson administration. So during most of the beginning of the United States, there was no federal income tax. The federal government got its income instead from import tariffs and taxes on a few items like whiskey. The states got property taxes, and later on there were some sales taxes. After Wilson created the income tax, same time he created the Federal Reserve System, initially it was quite low, down the 5-10% range. When World War I started, the top marginal tax bracket was quickly increased to 80%. During the 20s, it was lowered again in the 10% range, or the 20% range. But after that, the income tax under FDR during the Great Depression was increased drastically, first into the 60% range, and finally up into the over 90% range. This, among many other policies, probably contributed to the length and severity of the Great Depression. The income tax in the United States, or the top marginal rate thereof, stayed in the 90% range until the administration of John F. Kennedy. Kennedy believed that cutting top marginal rates would stimulate the economy, since wealthy people would not work for 10 cents on the dollar. Instead, once they had got into this income bracket, they would just basically take the rest of the year off. Kennedy was assassinated, but after that, top taxes were cut to a top rate of 70% as a top marginal rate, and it stayed around that range until Ronald Reagan again proposed the same ideas of John F. Kennedy, of people are not going to work if they only receive 30 cents on the dollar, and he got the top marginal tax bracket cut to only 28%. Since then, Bush 1 broke his famous read my lips, no new taxes pledge and increased the top marginal rate. Top marginal rates were also increased by Clinton, Obama, and currently the Biden administration wants to increase the top marginal rate as well as the capital gains tax rate and the corporate tax rate. Taxes under this progressive tax system are not only determined by how much income you make, but also by your marital status and in some situations whether you have children. So we have a filing status of single, married filing jointly, and head of household. If you're single, again, the first $12,550 is tax-free. That's of federal income taxes. You are still subject to Social Security and Medicare taxes. And if you're married filing jointly, there are two of you. You multiply this by 2 and you get $25,100. For much of the tax brackets, the married filing jointly top dollar amount in the bracket is just twice the single amount. 9,950 times 2 is 19,900. And this is the case up into the 32% bracket, where 2 times 209, 425, is 418, 850. But in brackets above this, there exists what's called the marriage tax penalty. If you have two married wealthy individuals making around $500,000 a year, well, if we take 5, 2, 3, 600 and double it, that's well over $1 million. But the top of the 35% tax bracket for married individuals is only 628. So in this case, these individuals would be better off getting divorced, and then they would pay lower federal taxes. This is what's called the marriage tax penalty. To look at an example of this, of how it is applied in calculations, we consider an individual with a W-2 reported income of $90,000 and ask what will their total federal income tax liability be in 2021. We also ask what's their marginal and average income tax rate. So an individual with a W-2 salary of $90,000, again, the first $12,550 is not subject to federal taxes, dist, Medicare, and Social Security. So we take $90,000 minus the $12,550, and we get $77,450 is their taxable income. We look in the brackets over here, and we find that dollar amount of $77,000 is between $40,000 and $86,000, so they are in the 22% marginal tax rate. To figure out their tax, we have to calculate how much tax they pay at the 10%, 12%, and 22% level. So the total tax paid below $12,550 is 0. The total tax paid in the 10% bracket goes up to $9,950. So we take 9,950 times 0.1 and get in that bracket they pay $995 in federal income tax. The next bracket is $40,525 minus the $9,950, that bracket includes $30,575, which is taxed at 12%. So in that bracket, they pay $3,669. Above that, they have the $77,450 in taxable income, minus the base of this bracket of $40,525, gives them $36,925 in the 22% bracket. So in that bracket, they pay $8,124. So their total federal income is the sum of these three on here. We add up the 995, 3669, and 8124, and we get a total federal income tax of $12,788. If we divide this by their total income, sometimes books will ask for taxable income, but if we divide it by total income, we get a tax rate of 14.2%. So again, consistent with the idea of progressive income, the more you make, the higher taxes you pay, or the higher taxes are paid on the last dollar of income. We see that the average tax rate of 14.2% is well below the marginal tax rate of 22%. Of course, this is not the only tax this individual will pay on this income. All but 9 states also have a state income tax, some progressive, some flat. Some cities have their own income tax. New York's is very high. Kansas City also has one, as so does Toledo. And individuals will pay a payroll tax again, including both Social Security taxes and Medicare taxes of 7.65%, which is also matched by the employer at another 7.65%. I thank you for watching this video.